my next question to you would be like, people are probably thinking, well, how do you find an asset that's 70 or 65% of the market? Like, why would somebody want to let go of a property like that? Like why would somebody want to let go of a property that far less than market value? So can you go over maybe like why somebody would sell a property at that price? And who's the ideal seller? Like, who are the typical sellers that are selling these properties for 65%, 70% of the value?
Yeah, man. And I think it's a great question. It's just like the single family. How do you get deals on single family side? Well, there's motivated sellers out there, right? There's death, disease, divorce, disaster, like all those different things where price isn't the greatest motivation for them to sell. It's to get a headache, get a problem off their plate. A lot of the properties, some of the properties I bought earlier on, most of the properties I bought earlier on were mom and pop investors. And they were just, they bought this apartment building. They had it for 20 or 30 years. They sucked all the cash flow out of it, never put any money back into the building. And then all of a sudden it comes to a point where it needs a bunch of money and they're not bankable and they don't have the cash. They don't have the capital to then infuse, and they're backed into a corner where they have to sell. So that's one person who I bought a lot of property from. Another, surprisingly, is really sharp entrepreneurs who make millions of dollars in whatever their traditional business is. And then they think, oh, listen, I drive by apartment buildings every day. Maybe I lived in an apartment building when I was younger or whatever. And they're like, oh, if I know apartments and real estate's passive, right? It's 100% passive type of an asset. You don't have to do anything. And then they take their money that they make in their traditional business and they deploy it into apartment buildings. And they think it really is passive. They don't think they have to do anything, right? Residual and passive are two very different things. Like, residual means you do something once, you get paid on it over and over again. Passive means you don't do anything, right? Apartments are residual. Now you can layer it with passive management and asset management, but dude, you need to have your own team. Somebody needs to be paying attention to this thing. And they just don't, right? So they take their money, they dump it into an apartment. They don't have the experience. They don't have a joint venture partner. They don't have a boots on the ground partner. They didn't interview 5 different management companies, and they don't even know the right questions to ask or how to look at the reports to see if everything's checking out. And if they're not, make sure they're not overpaying for landscaping or like, dude, I've had management companies that put like Christmas bonuses on my property for employees that didn't even work at my property, right? Like, what? Paying for computers for their employees out of my property expense report. And I'm like, what is this? And so some of these other entrepreneurs, they're making money in their other business. It's like starting a new business. It's like you and me sitting at a bar and saying, you know what, Jose, we should open a bar, dude. We drink in one. Let's just go and open one, right? And you're like, no, it's a little bit different to drink in a bar versus operate a bar.
Owning a bar.
And so there's a lot of entrepreneurs who are smart, who are very successful, who are very wealthy, who think it's a passive investment, just go and dump money into commercial real estate. And then they get their butt handed to them. And then a guy like me who actually knows what they're doing swoops in and buys it for pennies on the dollar, because essentially they're like, listen, I'm either going to lose this property or I'm going to lose the property and my business if I keep on taking my eye off the ball in my traditional business. So they end up just dumping the property at a deep discount and they go and focus on that. And then I'll give you one more is there's a lot of operators who just don't pay attention, meaning they don't look at the highest and best use of the property and the amenities and the space and the square footage and the property dimensions and everything. And so, like, again, it's very predictable what these properties are worth based on the rental income minus the operating expenses. There's a lot more ways to generate revenue and generate income than just rents. What if you put in laundry? What if you have storage units or storage lockers in the basement? What if you have off-street parking? What if you have covered parking? What if you actually have garages? What if you have a dog park? You put in a dog park and you don't make money from a dog park, but you know what you do make money on? The pet fees and the monthly increase of $25 to $50 a month per pet that comes in. And all of a sudden, these things incrementally add up over the course of months and a year, and all these little improvements. Dude, vending machines, there's a billion different things. You can go and negotiate a deal with your cable company and have them put cable in the entire building and internet in the entire building, and it might cost you $30 per unit per month, right? The tenants, if they went and signed up on their own, it'd be $150 per unit per month, right? And maybe you can bill it out to them at $80. So you're saving them money. That's a big win for them. And you're making an extra $50 per unit times 100 units. It's $5,000 a month, $60,000 a year, adds over $1 million of value to the property from doing that, right? So it might cost you 150 grand or 200 grand to have that invested. But guess what? It increases the value of the property by $1 million. So there's things like that you can do that create significant improvements on the income that people just don't pay attention to.